Now, Simon, we get a lot of questions from our listeners, and a lot of them are kind of saying, look, I have some excess funds, or I have equity built up in my home. I'm not getting enough in terms of just putting in the bank. Mutual funds, the fees are overwhelming. What options are there? We get these constantly. How can we make money in real estate?
Yeah, they're still investing in the dark side. I mean, I talk about the stock market there for a second. I'm a little biased, but, quite frankly, many people are coming over to the real estate side. But at the same time, some are afraid of the problems dealing with income properties, managing
they want to be
tenants
more
and so
passive,
on.
don't they?
Others would like to get involved in something using the equity in their home, as you said. And here's the thing: money is cheap. What I mean by that is you could borrow against the equity in your home for 3.5% and put it into one of the most modest investments in real estate that generates anywhere from 20 to 30%. So more and more people are wondering why, but they don't know where to invest.
And how. And this is not a new concept. I mean, it's a beautiful thing called leveraging. And we have the expert right here in studio with us. We have Peter Politis, and he's with Greybrook Realty Partners. And we're thrilled to have you here in studio with us. So welcome.
Thank you very much for having me, guys.
Yeah, welcome back, buddy.
So let's educate our listeners. That's what we're all about. Explain what you do.
So Greybrook Realty looks at the real estate market in a little bit of a different fashion than the average real estate investor. We're not so much a consumer of product where we're buying, whether it's condos, townhomes, or homes as investments, but we're on the manufacturing side. What I mean by that is that our investors get to partner with some of the biggest developers in Toronto to buy land, own land in partnership with these developers, and build these large-scale developments and split the profits 50-50 with the developers.
Lack of a better description, the little guy, little gal, actually gets to get in the big game here.
Yeah, one of the fun things for us is that for our investors, we have some of the biggest developers in Toronto that go to work for us every day.
Can you explain who those are? Can you give us some insight?
Yeah, absolutely. We have active partnerships with Tribute Communities, Fernbrook Homes, Castle Point, Citizen, Empire Development Group, Plaza Corp, the Goldman Group, and others.
Okay, so these are builders with incredible reputations, and they've been around a long time. And big bucks. Yeah, absolutely. This sounds great. Amazing. I want in. Sounds good to me, but how do they do so?
Generally speaking, we have different projects that we present to our investor base. So as an investor, you can choose whether you want to participate in a high-rise development, a townhouse development, or a master plan community. But all of the high-rise projects that we do are exclusively in the major downtown core.
All right. So they actually get to pick what they're most comfortable with. They learn about the project, and they themselves make that choice.
Absolutely. And our typical investment time horizon is probably about 4 years. We have 2-year projects and we have 6-year projects, but on average, a 4-year project, and our goal is to double our money every 4 years.
Double your money. So let's talk about the returns then somebody can expect.
Sure. We're just about to close actually on our 47th development project, approaching 13,000 residential units. Every project's been profitable to date. And in fact,
every project's
been profitable to date. In fact, we did a little bit of a regression and checked up on our past projects. Every project's actually made more total dollars than we've projected. So we've never even had a project make less total dollars. Now,
okay, but let's be conservative then. So if we look conservatively, your objective is to double every 4 years. So simply put, 25% return per year.
Correct. Now, it's important to understand that these returns are not paid quarterly or monthly or annually. They're really paid in aggregate at the end of the project when either people move into their home or their townhouse or their condo.
Okay, so it's important then, Peter, for people to understand when they give you $100,000 and they pick the project, once you take hold of that money, that they should understand within 4+ years, depending on the project, of course, that they will not see anything until then.
Absolutely. And one of the things that we look for is obviously you can invest vis-a-vis a corporation or in cash or your own personal name, but we also typically take RSPs, TFSAs, RESPs, LIRA, and just about any other registered plan that exists.
But what's the minimum investment and what would you say the average investment is, Peter?
Yeah.
Sure. So our minimum investments for someone who qualifies as an accredited investor is $25,000.
Okay.
And somebody who doesn't qualify as an accredited investor must invest a minimum of $150,000 in order to participate.
Okay. Can you explain the difference when you say, when you say qualified and non-qualified accredited investor? What does that mean?
Sure. An accredited investor is somebody who meets any one of the 3 following criteria. So not all 3, but any of the following 3. $200,000 of pre-tax income, whether it's employment, rental, gains in the stock market, anything like that, or $300,000 of household income, or $1 million in financial assets.
Okay, so one of those three is required.
Correct.
All right. Otherwise, you'll be considered to be unaccredited.
Correct.
Which means you just have to put more money up.
Correct.
Now, once they do put that money up with you, let's say they get into one particular investment, because they're already doing so and they want to do another one, does that kind of, because they're already in the game, so to speak, allow them, or do they have to stick with those minimums?
Unfortunately, the threshold is a minimum on every project. Yeah. And now to give you guys an idea of the scale and size of projects that we do, we can do $100 and $200 million projects. We can do $1 billion developments. Right. So they're very large scale projects. We recently purchased the northeast corner of Yorkville and Avenue Road in partnership with Empire Communities. So the municipal address, amongst many, was 140 Yorkville. So everything from Hazelton Lanes Hotel, kind of down Yorkville to Avenue, north to Whole Foods, Greybrook, its investors, our developer, are partnering, and that's one of the types of parcels of properties that we've bought.
So we're in partnership with the builder. And because I understand the development process, a builder will not build a site unless it's going to be profitable with pre-sold units, correct?
Yeah, that's part of the banking underwriting, the systems that we have, and why, frankly, our Canadian banking system is so strong, where we won't start until we've sold enough to be profitable. So until then, we as investors will sit on our property. We use very little leverage, frankly, when we buy our property. 70% of what we buy is probably bought debt-free. And the other 30% has what I call responsible leverage, which means, a mortgage from a major Schedule I bank, and there's legitimate income from a major tenant.
So literally when one shovel goes into the ground, we're already profitable. So it's a positive sign. So when we're investing in these deals, we see the construction start, there's big smiles on everybody's faces because it's already done.
Absolutely. Groundbreaking ceremonies are much more popular in July than they are in February. But absolutely, it's definitely a celebration for us.
And I think it's important to mention yet again that you have a proven track record. That's phenomenal. Year after year, project after project. I mean, they are profitable, and you've actually surpassed your expectations, which you got to love that.
Mm-hmm. I can tell you, I wish we could take a lot of credit as the smartest guys in real estate, the luckiest guys in real estate. It's not the case at all. It's really our underwriting model. When you don't take zoning risk, which means when I buy something, I can build residential development on there. I buy it with little or no debt. I'm confident that someone's going to live in Liberty Village or on College Street or in Yorkville or at Mount Pleasant and Eglinton or wherever our developments are. So we tell our investors the two biggest risk factors in doing this are typically time and illiquidity.
Okay. Now let's give a profile of your investors to date. Who are they?
We have about 4,000 active accredited investors. We have about a 96% investor repeat rate currently. And we have a broad spectrum of investors. We literally have other major developers who co-invest in these projects. We have billionaires, professional athletes. We have had school teachers. We have had business owners. We have a wide range of who the investors are. And as far as their investment totals goes, we have people who invest $25,000. We have other people who invest $5 and $10 million on a project-by-project basis.
What I love about this is that you're truly anonymous, and it doesn't matter who you are. You're playing in the same game. And it's a wonderful one at that. And when you said 96% repeat rate, that is substantial. That's like part of that track record. It means people come back again and again because it's working for them. If it wasn't, they wouldn't be coming back again.
That's the ultimate testimonial.
That's a huge testimonial. Yeah. But I also can say, I'm sure you would like to get new investors in, because also that allows for that portfolio, and everybody benefits because there's now other projects that you can buy into or you can get involved in, or land acquisitions, so that there's more opportunity for investors out there, right?
Absolutely. And our investor repeat rate's important to us, and obviously the returns have to be there, but we try to give a very good client experience. So whether it's continuous reporting or status updates, there's always a good flow of information between Greybrook and our investors. And for us, the more investors we have, the ability to do projects at any point in time exists, because as we know, people are not professional investors of money. They don't wake up every morning, how am I going to deploy my capital today? It's usually a secondary thing for them. So we compete with life. I bought a car, a boat, my kid's going to medical school, I'm away this month. So we like to have as many possible investors. So if in that period of time we have a property that we want to go ahead and pounce on and buy, we have the ability to do so at any point.
And a lot of times people would think that's a negative because it's just taking away from their opportunity, their pie. But this is the exact opposite. It's actually beneficial because there's more properties that will come into opportunity for them.
And for us, there's no class of shares. So whether you invested $5 million or $50,000, you just have a larger, smaller ownership percentage in the property.
So let's remind our listeners then, Peter, of course, they can visit realestatetalkshow.ca. And of course, there's a Greybrook tab right there. And you're a regular guest, so we love having you. And again, what a wealth of information. Thank you.
Thank you very much for having me, guys. Appreciate it,
Peter. Yep.